Hi everyone, let's go over my micro, bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bullish scenario where we have a three-wave corrective structure that is already finished, with the most common target of wave Y being between the 1 and the 1.236, taken from the high to the low of W to the high of wave X, with then a zigzag structure in the W, any corrective pattern in X, and then a flat or WXY in then finally this wave Y. Now we've been looking at this wick for a very long time. It was a key level the whole week last week, 29.5k. It got wicked for now this move to the upside, and in the bullish scenario you want to see continuation to the upside, meaning you want to see impulsive structures to be formed on the local time frames. And that's why I have a map over here that is called local, as we're going to zoom in to this structure in a second. The bearish scenario is still that this is a three-wave structure, but then this is only the beginning of a bigger corrective structure in a wave W or a wave A. There's two options that I have on the chart that is still very open: a WXY or an expanding flat A, B, and then a wave C to the downside. A WXY usually is a nice channeling structure, so when the high of X is in, you can pull a channel which then gives an indication of the potential low of a wave Y. And what I think is interesting is that if we do get the WXY scenario, then the target box over here has a very high probability of acting as support between 29k and 28.8k for then potentially the low of a wave Y and a move towards the upside. So a potential long scenario might form over here, stop loss wherever, of course, depending on how price comes down, and then looking for upside. Of course, no financial advice, because you need your own strategy, your own plan, your own entry requirements, but at least it is an idea to keep an eye on. Now, if we look at an ABC scenario, which can actually be more interesting as it is a fake out, and probably many people will be buying over here, but they might then be buying right inside resistance, as an ABC expanding flat is a three-wave in A, looking for a three-wave in B, for then an impulsive move to the downside in a wave C. So in this scenario, the most common target area for a wave B is between the 1.236 and the 1.38, pulled from the high to the low of then wave A. And as you can see, it is very close to the 2022 range highs, meaning price could take the liquidity above, close inside this area still, and then looking for a move towards the downside. So this can be a potential swing failure pattern short setup, where if you wick above, close below, that's the entry over here with the candle close below, move to the downside, stop loss above the high, and then ride the waves to the downside. Of course, again, it does depend on how price is going to approach this area, because if it is going to be very, very impulsive with volume increasing massively towards the upside, it might be more reminiscent of a very impulsive structure where then the 2022 range highs might be broken. Now, if we then go to the local structure, then I like to talk about the following. So as you can see, I don't really have a particular count on my chart. However, sometimes Elliott Wave knowledge doesn't need you to have a certain count on the chart. Sometimes it can give you insights by just looking at how price action is forming, even though it might be too complex to count into detail. So yesterday, I, in the Discord group, wrote something about this price action over here. So this is a screenshot, as you can see, with a couple of levels. You see the daily naked point of control that I also mentioned in my videos at 30.7k, and then also the current weekly naked point or point of control of last week, and you see the month point of control, but that one's wrong. So don't look at that one. But what I said over here is that the daily naked point of control was finally touched in the silver update section, by the way. So was finally touched. It took ages. But as you can imagine, this sideways structure so far is difficult to count, right? It's very choppy, it's messy price action, and that is also why I like to keep a close eye on the CVD, which we're going to check in a second, as it can give an indication of where price likes to go, which I can use as information for my Elliott Wave counts, right? Because the CVD can give an indication for up or down, so I like to use it. Now, from the bigger wick low, price moved up in three waves, in my opinion, which we'll check in a second. After that, price started ranging, but more importantly, it didn't move down impulsively or quickly. This range, then by itself, is likely a complex structure. So there you go. There's the Elliott Wave knowledge coming in. Even though I don't have any counts on the chart, it's very complex to count. But just looking at this range and how waves are being formed, I'm like, well, this might be a three-wave structure. Therefore, I'm thinking about a potential 3-3-3 scenario, WXY. And in that case, my probabilities at the moment are higher for a move up to take the local high at 30.7k than the low at 29.5k based on Elliott Wave insights and not any particular count. So basically, a higher probability of taking this high after this wick than looking for this low. And I've seen online many other opinions, mainly because when there are big wicks tend to be filled, right? And that is true. We have two big wicks to the downside, and of course they can be like filled immediately. The thing is, price over here then retested, and that was important. Price retested the weekly point of control of last week, as you can see over here. So that's why I mentioned I don't really like price to go below that weekly point of control, which I wrote in the message after over here. So that acted as support for then eventually a move to the downside, which happened overnight for me to take this high. And now, of course, again, we are ranging. Now, what also helped a little bit is that if you pull a fib from the high over here to the low to these highs, then the wick low was right inside the 1 to the 1.236 fib target, which is a common target for either a wave C or a wave Y. It also hit the 382, which was quite interesting for then this bounce. So at least it gave a little bit of like support into the words and the thoughts that I had as well. And now we see price moving down. If we then go to the CVD, we also had bullish divergences, higher low in price, lower low on the CVD. The target was this high, which has now been taken locally. So that is very nice. And if we go to the 5-minute time frame, I mean, yeah, we do have bullish CVD divergences over here, but this is the 5-minute. I don't really prefer 5-minute. I like to stick on the 15. We see price currently moving to the downside. Yeah, not really bullish divergences, maybe over here on the blue line, but we already had bullish dips here as price or CVD went lower and lower. So I prefer to sit on the sidelines here and just wait and see what price is going to do. A little bit of a support area over here, which is positioned at 30.5k. But then again, you know, we do have wicks, and the probabilities on the micro scenarios might be a bit more downside. We also have some high impact news this week. So on Wednesday at 8 p.m. Central East European time, on Thursday at 4 p.m. and on Friday at 2:30 p.m. Central East European time, you can see the red flags. That is high impact news, which can create high volatility. So make sure that around these hours this week, you are going to be trading safe. If we do talk about probabilities, new section in every video, then currently, in my opinion, based on the price action that we have, the micro bearish scenarios are have a higher probability of playing out in either a WXY or an ABC. Now, for an ABC, I like to see price move impulsively, or not impulsively in a 5-wave move, but quite quickly to the upside. So maybe the WXY has a higher probability, but by any means, the higher probability currently is for the micro bearish scenario. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, which is the CVD. And for now, thanks for watching and subscribing, and I'll see you at the next one. Bye bye.